Welcome to Options Trading University. We've been getting a number of fundamental questions about equities, and we have decided to begin at the very beginning. The question is, what is a stock? Let's start by declaring that there are two ways for a company to raise capital, and they would use this capital to operate their business. The first is to sell ownership, and that is what's called stock ownership. Stock ownership is sold by the company. The buyer becomes an owner and is entitled to the gains that the corporation achieves, which may or may not include a cash dividend. This is the fundamentals of stock and stock ownership. But it begs a second question, which is, what is a bond and what is a corporate bond and how does that function? Very simply, a bond is a loan. The lender, which could be you or it might be another company, would loan a certain amount of money to another corporation to run its business. For that, the bondholder would be paid interest, and at the end, the loan is paid back. So these are the two ways in which corporations raise money, and these are the benefits that are afforded to each group that has participated in this. So we're going to stop there, and then we're going to go on in our next section to talking about what is an option, which fundamentally is a stock derivative. So we'll get to that. See you then.